What's up, guys? I'm going to make this video a bit more informal, just give you my background, and then I'm going to hop into a bunch of different trades and the charts, give you guys a bunch of tips and tricks about the logic, the strategy, the systems that I have in place, and actually like picking your contract. I've been getting that question quite a bit, so I'm going to answer all of that here in this video. But for those of you who are new to my channel, my name's Francis. I'm a full-time trader, mostly stocks and options, but sometimes crypto and futures. Like most of you, I really started trading options heavily in like 2020, a little bit before 2020. And then like when the COVID crash happened, it was like all out mayhem. Everyone was at home and they were just trading and YOLOing all their money in stock options. But like over 10 years ago, I graduated college and I started just buying stocks for the long term. And that was kind of where I was stuck at for a long period of time. And then I really started getting into options trading. I'm really good at math. I have a background in finance. And I actually do work full time. I do work in the tech industry. So I'm fully remote on the East Coast and my company's on the West Coast. So most of them are asleep when the market's open. So it's really easy to just kind of watch, do some work, answer some emails in the morning, and then be able to trade and just like answer questions. And it's really my passion. And hopefully at some point I'll be just doing this full time. But like I said, in 2020, I really started getting into options, learning a bit more, setting up different strategies, learning a lot about technical analysis because you have to predict where price is going in such a short period of time. And if you're not able to do that, you're going to either just lose out to theta, which is just time, the time component on your contract. You're just going to burn that over time. So I got really hyper-focused into trading options. And believe it or not, I was like one of the first people into GameStop before the run actually happened, when it was like trading at $4 or $5. I actually know a lot of the people in the community who were on the Netflix GameStop documentary, like close friends. And I've been in the trading community for many different years, but completely anonymous. This is kind of like me trying to build a personal brand and just try to drop as much information and value as possible. Like I'm not charging for anything. I would just like to be someone who, you know, trades full time and just shares my thoughts and information. And then at some point, like I'll just be that successful of a trader, get to the certain goals that I have with how much money I want to make in the market. And then at that point, I'm just going to be probably wheeling stocks at that point, which is just selling options or covered calls against a really large sum of money and just generating passive income every month. So that's kind of like my goals and where I've been and what I'm currently working towards. And I'm sure some of you have similar goals or different goals, but you know, everyone wants to make money, and it's a lot harder than as simple as just like you put $500 in on some Tesla calls and you make 600%. I know I like post videos like that, and those cases are nice when it hits, but most of the time you can expect like 30-50% returns on average. And then every now and then you'll be in like a position where the stock just goes parabolic, like GameStop, and you know, you make 300 grand in a week. So let's just take a look at some information here. I'll give you guys like an idea and give you some tips here as well. So last Friday, we entered into these Tesla calls and we sold into strength. So we sold them at like 423% and 636%. And on Friday, we added 5 Tesla 275 strike call contracts for Friday the 28th at $108 per contract. So about like $500. And we flipped that into a little over $3,000. So why did I choose the 275 call? Well, I can't really show you right now because the price has moved, right? So like the 275 call for Friday is trading at $495. So, you know, $100 into $500 if I sold it at close today. So it's still like up there, right? Because price has actually moved so much. But why did I know that price was going to move, and why did I pick 275? Well, there's a lot that goes into it, but analyzing like the technical analysis which is just looking at the charts, price is, as a technical analysis person, you're a technician, you have to assume that all available public information is reflected in the stock price, right? If they had a good earnings, the price goes up. If they had a bad earnings, the price goes down. Maybe there's some sort of partnership or news, some delivery numbers for Tesla. It's going to move the price of the stock, right? But at times where there's no news, like why is price moving up and down, right? Well, you have buyers and sellers in the market who are constantly trying to find the actual value of Tesla's stock. And so price will move over time into levels where maybe they have done a lot of business at that price point, or maybe where they haven't done a lot of business at that price point, right? And you'll have like these reactions on price. Like if we just look at the daily chart and say we remove all the drawings that I currently have here, you'll see that price has different support and resistance levels. And the most simple way of doing it is like, well, over here, price rejected there. So that's resistance. And then you can see like over here, it rejected there again. So, and right now it's kind of like right at that level, right? Like it's holding above it. Is that acting as support? And if we break down, is it going to fall further, or is it going to bounce here and go higher? And then like, well, up here, there was, here's another level of support. Here's a level of resistance. Here's a level of support. And so you can kind of just like see where price reacts, and you can say that, well, that's a level of support, right? History doesn't always come true, but it often rhymes, right? So like if price comes back down to this 217 level, there's probably a pretty good chance that it'll bounce again, just like it did here in the past. So that's kind of like a quick and easy way of how I would look at support and resistance. And then there's a bunch of other ways you can look at volume profile and things like that. But I'll cover that all on my channel at one point or another and just kind of hammer it into you as much as possible. But if we're just going to analyze this trade on Tesla, there's like a few things I want to cover. So first, you had like this gap up, right? So sometimes you'll have these gaps in price. You'll see like there's a gap here and there's a gap there. There's a gap over here. There's a gap over here, and that's kind of what this shaded box is showing, right? So on earnings, you can see that this was an earnings. It has the E at the bottom. They reported earnings, and then you had the next day, it gapped up to $242, and then it pushed higher, and then it rejected right around that same resistance level from before, right? So you can see that you could take profit right around there. So like if you're playing earnings, maybe your contract that you would enter into would be like a 255 call, because you saw that like maybe it's going to get back up to this candle, or maybe it's going to get back up to that candle. So you have an entry point at the current price, and then you have a target out in the future at either some sort of resistance level if you're playing calls, or some support level if you're playing puts. So you always want your contract to have the potential to go in the money, right? Because at expiration, if your contract is out of the money, it will be worthless. So you always want at least the chance for your contract to go in the money. You want to have a chance that by expiration, whatever date that you choose, that the price will have at least a chance to get there, right? So like looking at Tesla, I was entering these contracts on Friday. Let's go to the 5-minute chart. You can see I entered into these contracts right around 12:30 on Friday, and I had 275 calls. Well, we had this trend line, right? This red trend line, and we broke down. And typically when you have a break of a trend, price will, especially if it's a strong trend line, right? So we had like multiple reactions here, but when we had that breakdown, you saw a really strong push to the downside. That was like a capitulation move, because that is a strong trend line, right? Everybody in the market is looking at that trend, and it's easily identifiable that that trend is there. And so when that broke down, people started to panic, they started to sell, they started to buy puts, and that forces price lower. They started to short the stock, and you saw this really strong move to the downside. So when a trend has a lot more reactions to it, and it's more gradual, right? Like if the trend was like kind of like this, it's kind of flimsy. Like it'll break pretty easily. But when a trend line is flat, it's usually harder to break. So that's why you have like multiple bounces from that level. And when it finally broke down, that was a strong confirmation that there would be a capitulation move. So you could have bought puts right when it broke through that like 272 level. But nonetheless, when it broke that trend, oftentimes you'll have a retest of the trend. And this is the case when you have a breakdown or a breakout. So in the downtrend, if it breaks out to the upside, you'll have this strong push. And it's kind of easier to understand because in a breakout, people often will take profit and then the price will come back down and retest the trend, right? Because those people who were in the stock, the price starts to go vertical very quickly and then it causes a profit-taking event and the price drops back down. And then that shakes out all the people who are selling on the breakout. And then it gets bought back up when it retests that trend. People start to re-enter, and then you have another push to the upside. And the opposite is true for a breakdown. So you had a breakdown of the trend. I knew at some point Tesla would like to go back up and retest that red trend line. On Friday, I was thinking, well, by at least March 28th, so I'd give myself 5 days of time on the contract. My target would be 275, which is lining up with a resistance level as well as the trend line. So that's why I chose the 275 call contracts. Obviously, I could have chose like 260 or 265 or 270. Those would all be viable options, but keep in mind, the closer in the money the contract it is, the less risk and the less reward. Sometimes when I have high conviction in a trade, I like to maximize my risk, which also maximizes my return. So if I bought like the 260 calls, at the time, I probably would have spent more money up front because they're closer in the money, it's less risk, therefore there's a premium associated with that contract. So say these like 275 calls, which were $108, the 260 calls might have been like $400 or $300, whatever it is, right? But like the price would drop the further out the money it is, right? So like we'll just say these 400, 200, 300, 200, and then 100. And I can maximize my return because I can buy more contracts further out the money. So you still want to be within your target at all times, but if it's a high conviction trade, maybe you'll go a little further out the money. Or if it's a high conviction trade, you'll go further out the money, but also shorter in time, right? So these were all for like 328. So I would only have 5 days for the price to get there. But if I chose like, April 17th contracts, the price of the $108 that I spent on the 275 calls, if I bought 275 calls for 417, those might have been like 600 or even like over $1,000 per contract because it has way more time for Tesla to get there. So I knew that on Friday because, we filled this gap lower. We were starting to have this reversal. We had 2 bear gaps that formed, right? So price gapped down 2 days in a row, but then price started to gap up. So this was a bull gap. These 2 were bear gaps, 1 and 2. Number 3 was a bull gap. And then we filled this bear gap, rejected there for a moment, and then started to push higher and got over this 242 resistance level, and then we started to fill this gap. So once we started to fill those gaps, I saw that the bulls were showing up. We had a bull gap here that was going to act as support, and the market SPY and QQQ were starting to bottom, and then we had a strong gap up on Monday, and it rallied very quickly to my price target. I started to sell on this first move, and then I started to sell a bit more. So I made like 400 and then over 600% returns. And that's not always the case in the market. Sometimes you might only make 100%, 200%, 50%, 30%. You just don't know. And sometimes you just get lucky, right? Like all the stars align. This trade's not going to happen all the time, right? Like Tesla went up 12% in one day. And then you're going to have to wait for a price to move around again and then find some other level to play it long, right? So you have to be patient. You have to have a plan in place. You have to sell into strength, take profit, because when you have this move, what are other people thinking? They're going to try to take profit as well, and then you could have like a counter reaction as well. So I know I threw a lot at you there in this video, but I'm just going to keep pushing out content. Let me know what I can do to improve. If there's anything you want me to cover, anything that was confusing in the video, just drop it in the comments, and I'll see you in the next video, guys. Peace.